For problem 13.4 in the demonstration packet, we are now going to pay the payroll liabilities, that is the payables that were recorded for salaries expense and payroll tax expense. And some of those can be combined into one check. So for example, the federal income tax payables, the Social Security, and the Medicare can be paid in one check to the federal government. So that's the one we're going to start with. So on the first line you're going to record the year, and then on the second line you're going to record the date that we're going to be sending this check into the federal government. So in this case it's October 6th. Then we're going to record employees' federal income tax payable on the first line, and this will be a debit because we're going to be paying this off. Then you will be getting this amount from salaries expense general journal entry, or you can get it from the totals on the payroll register. So it's a debit of $1,459.47, and actually we're getting that amount from the T account listed for problem 13.4. Again, we can include Social Security tax into this one check. So you're going to write Social Security tax payable. And you will be getting that amount from the balance shown in the general ledger. Or you can find that amount by adding the Social Security tax payable for salaries expense and for payroll tax expense. So it's going to be Social Security tax, which is 6.2% for both the employee and employer. And that will be a debit of $375.74. We can also include Medicare tax payable in this one check to the federal government. And so again, you could get this amount from the Medicare tax payable general ledger balance, or you can total the Medicare tax payable in the salaries expense general journal entry and the payroll tax expense general journal. And that is $82.50. So now our check to the federal government will be written out for $1,917.71, which is these three numbers added together. So in this case, we can combine three different payables into one check to be written to the federal government. And then our source document will be check 534. The next thing that can be paid is the state income tax, and this can only, there's nothing else that can be paid with this, so it will be one check, and it'll be check 535. We would get this information from either the employee state income tax payable general ledger balance, or we can take it from the salaries expense general journal entry. And this amount is $239.34 as shown in the T account for problem 13.4. And then we wrote out a check to pay that off of $239.34. The next thing that needs to be paid is the federal unemployment tax payable, and again, this can only be paid on one check, nothing can be combined with it. So you'll write out the check for $47.92. So cash and bank will be the credit, and it's check 536. And then the next tax to be paid is the state unemployment tax payable. So we'll write out check 537. So state unemployment tax payable will be the debit and cash and bank will be the credit. Notice that you cannot combine the employee state income tax payable and the state unemployment tax payable. They're going to go to two different agencies. So that's why it's two different checks. So again, for federal income tax payable, Social Security and Medicare, that can be combined into one check and sent to the federal government. Otherwise, employee state income tax payable, federal unemployment tax payable, and state unemployment tax payable have to be written out with separate checks, so they're separate entries into the general journal.